Hi everyone and welcome back to today's morning report on Wednesday the 20th of May with me, Rich Perry, market analyst at Tantec Markets. Let's move on to cable now, and this cable chart is very interesting because we've had this sharp decline in the last few days. It was accelerating lower, and you've started to find potentially a bit of support. Now I'm going to draw in a trend here that will show you that this is coming basically on the uptrend since the bottom. Now I think this could still potentially just be part of this big bull run higher. You've seen this sharp move down back at the end of April, and it found support and then started to push higher again, and we've seen the sharp move down again. And look at the momentum indicators, no real significant breakdown. RSI still above the low that we saw back in early May, up at around just below 60. MACD lines not yet crossed over, still positive. Not far off being crossed over, but still positive. Stochastics are falling away, yes, but they're still above this reaction low that we saw in May. So there's no real significant breakdown, and also we're trading above the 21-day moving average, which I've seen as still a fairly decent flanking of all the moves that we've seen in recent times. And the fact is that we're still trading above that. So it's interesting, this move that we've seen, because they're holding on to support. And I'll show you the intraday hourly chart. And this intraday hourly chart, I've said yesterday in my morning report that I thought that the band between 55 figure and 55.50, 55 figure being that reaction high in late April, 55.50 being the key reaction high in late Feb. So those two key highs being very important on this chart. On a closing basis, we haven't broken down yet, and the fact is that we had a near-term, obviously a spike down to 54.45 yesterday, but then you started to find support back around that 55 level. We've had the Bank of England meeting minutes come out today. They've actually been taken fairly positively, few pips up to the upside, even though there was a unanimous vote to keep rates hold on steady. I think that the reason that cable has reacted higher is because there's talk of slack being fully absorbed in slack in the economy being fully absorbed by within a year. So that would suggest that within a year you're going to see an interest rate hike, and that is pretty much for the, that is actually putting a pretty definitive time frame on it. So interestingly enough, that is why I think we're seeing the cable pushing higher. So I think if we see another close above 55 figure today, that would be, I think, a fairly decent candle, considering the sharp downside move that we'd obviously had in the last few days. That would be a consolidation move, and I think that if you can start to see a move back above 55.50, which is your initial old support becomes new resistance, that's your initial resistance. I think if you see that move, then I think we could start to see a bit of a recovery, perhaps move on. You've also got further resistance at 56.30, which actually coincides with a couple of lows that we saw back on the 13th. If I zoom out slightly here with a crosshair, 56.30 becomes quite an important near-term resistance now. So again, 55.50 is your initial resistance, and then 56.30. So a couple of levels there. But yeah, as I said, if this starts to gain support on the consolidation and doesn't close below 55 figure, I think that becomes a very interesting level bout of support, because we've still got that 54.45 low intact from yesterday, and on the daily chart you're still holding on to this uptrend. So not yet turning bearish on cable, and I'll be very interested to see what happens today, because usually the second day after such a big bearish candle is a very important indicative day, and so far consolidation suggests uncertainty with the move and potential for this uptrend to continue, but still a long way to go yet, but very interesting move on cable. Anyway, I wish you good luck, and I'll speak to you later. Thank you.